Categorization is where the chart of accounts meets the legal standard. The chart gives you the right buckets. The standard tells you which transactions belong in business buckets at all. The standard is 2 words. The discipline is applying those words at the point of categorization instead of at the point of audit. This unit gives you the words, the pass-fail examples, and the gray area framework. Every contested deduction in an audit gets argued against the same 2-word standard from the code. Ordinary means common and accepted in your field, the kind of expense another working coach would have. Necessary means helpful and appropriate for the business, not strictly required, just genuinely connected. Both must apply, and the test runs at the point of categorization in your books, not at the point an auditor asks about it. Ordinary is a peer group test, not a personal one. The question is whether another coach with a comparable practice would routinely incur this expense. A professional camera for a coach who ships video content? Yes. The same camera for a coach who works only on Zoom? No. The standard is what your peer group looks like in aggregate, not what one individual coach could plausibly justify on the most generous reading. Necessary does not mean indispensable. The test is whether the expense is genuinely connected to the operation of the business, not whether you could survive without it. A scheduling tool you use weekly to book clients clears the test easily. A subscription you signed up for in March and last opened in April does not. The line is real, daily use of the business, not the strongest argument you could construct for it. Proportionality is the third filter most coaches skip. An expense can be ordinary and necessary and still fail if the amount is extravagant relative to the practice. A $300 dinner with one client around a renewal conversation, defensible. A $3,000 dinner with the same client. The auditor wants the conversation that justifies the multiplier. The standard scales with the size and stage of the practice, not with what you can afford on the personal side. Most of these are obvious. The point is calibrating your eye for what passes by default. Membership dues, video conferencing, replacement laptops, ergonomic seating tied to a qualifying home office, training that maintains existing skill. All clear pass categories for a working coach. Personal gym membership. Clear fail, unless you can document a direct business connection that does not exist for most coaches. The iPhone case is the one nuance. It goes proportional to business use, and the documentation is the call log and the carrier bill. The gray area items are not gray because the rule is unclear. They are gray because they sit at the boundary of 2 clear rules. An MBA can disqualify the deduction entirely if it positions you for a new field. A meal with a peer coach can pass or fail depending on whether the agenda was business. A meditation app reads as a business expense for a somatic practice and a personal expense for a coach with no somatic frame. The CPA gets the call on the first one. The other 2 you can answer yourself with a one-line annotation. The framework is built around a single question, and the answer determines whether you take the deduction at all. Can you write one sentence describing a clear, direct, normal business reason any peer would recognize without an explanation? Yes. Categorize it and add the sentence to the transaction. No. Leave it personal and move on. The right test is not whether you could construct an argument under pressure. The right test is whether you have to construct one. The audit reconstruction problem is what makes batched end-of-month categorization quietly expensive. 3 years later, An auditor asks why a particular transaction sits under professional development. You have a date, a vendor name, and a dollar amount. The business purpose you were thinking about in the moment is gone. The fix is annotation in the same action as categorization. One sentence in the memo field at the time the transaction posts. That sentence is the entire defense. Chris is doing the right thing. 3 questions, named clearly, brought to the CPA together rather than one at a time across the year. The desk and chair question is the easy one. The leadership program question is the one where the maintain existing skill test matters and the answer changes if Chris pivots toward consulting. The lunch question is mostly about the annotation. 3 names, the credentialing topic, the meals limit math written down before it can be forgotten. The annotation is what holds up 3 years from now, not the receipt. Most coaches will run this exercise once under deadline pressure, the night before they meet their CPA in February. Do it monthly instead. Last 30 days, 10 items where the bucket was unclear at the time. For each, write a 1-line business purpose any peer in coaching would recognize without follow-up, or don't, and the item moves off the books to a personal account. The CPA runs the identical sweep during an audit. Running it on yourself now costs an evening. Running it under audit costs days.